Welcome back, my awesome people. In today's episode, I will be highlighting silver. The real silver, not the bling bling kind. During economic downturns or when a downturn is expected, like now, many investors have taken comfort in owning precious metals. Silver is one of mankind's most definitive forms of money. They are a tangible asset, are usually highly liquid, and will protect your portfolio from various financial crises. Owning silver at this point in history is not only very wise, but will return a huge profit in the next bull market. While stocks and bonds can fluctuate, precious metals usually tend to rise, making silver and gold smart investments. But with so many options out there, it can be confusing deciding which precious metal option is best for you. There's often no purer way to own an investment than by physically owning silver. By investing in silver coins or bullions, you can physically touch your investment. You do not need to rely on an internet connection or a third party to manage your silver. Silver has established uses in the automotive sector, across various electronic products, in solar panels, and in photography. New technologies such as silver oxide batteries and various silver-based nanotechnologies in medical applications are all quickly becoming standards in their industry. This industrial demand makes silver prices more volatile than gold and generally reactive to various manufacturing news. The traditional means of silver ownership is physically owning the precious metal, often in the form of coins or bullion. Physical silver can commonly be purchased online through local dealerships, or pawn shops may also offer physical silver. In addition to ownership of physical silver coins, there may be additional value in owning certain coins. For example, certain years, denominations, or rarity will trade for a premium. For investors hoping to simply own silver as an investment, it would be wise to avoid buying collectible coins and paying extra for the collectability of non-silver characteristics. One of the more common ways to invest in silver today is to buy shares of an ETF, an exchange-traded fund. ETFs often own the physical silver, and investors simply trade shares of the fund that owns the silver. ETFs are a very accessible and liquid way of buying and selling the tangible good. Two of the largest ETFs that own physical silver are iShares Silver Trust, ticker symbol SLV, and Aberdeen Standard Physical Silver Shares ETF, ticker symbol SIVR. If ETFs and buying physical silver is not your thing, an indirect way of investing in the silver industry is by investing in silver mining companies. This type of investment does not represent ownership in silver. However, it represents ownership of a company that extracts the precious metal from mining production. Investing in silver has its pros and cons, and what's right for one investor may not work for another. When considering how to invest in silver, be mindful that each method of ownership has its own unique advantages and disadvantages. Interest in the silver market tends to flourish whenever the silver price increases, with investors beginning to wonder if it is the right time to add silver to their investment portfolios. While silver can be volatile at times, the precious metal is also seen as a safe haven asset, similar to gold. And that's why today's video is sponsored by theresourcereport.com, an excellent and informative site for investors looking at finding out what's really going on in the mining industry. Minerals, natural resources, commodities, oil and gas, the list goes on and on. Let the Resource Report do the hard work for you of keeping you informed with what is going on daily within a few minutes, because the news in the mining sector is always changing, and you as an investor will need to be up to date always. It is also important to look outside the mainstream news articles. So visit the resource report for a more in-depth coverage of what is going on in the mining industry. So sign up to the resource report newsletter at theresourcereport.com and stay informed. Safe haven assets can protect investors in times of uncertainty. And with tensions running high these days, they could be a good choice for those looking to preserve their wealth in difficult times. With those factors in mind, let's look at the pros and cons of buying silver. Pro number 1, silver can offer protection. As mentioned, investors often flock to buy precious metals during times of turmoil. When political and economic uncertainty are high, cash generally takes a backseat to assets like gold and silver. Pro number 2, silver is a tangible asset. While cash, stocks, bonds, and other financial products are accepted forms of wealth, they are essentially still digital or physical promissory notes. For that reason, they are all vulnerable to depreciation due to actions like printing more. An ounce of silver bullion, on the other hand, is a finite tangible asset. That means that although it is vulnerable to market fluctuations like other commodities, physical silver isn't likely to completely crash because of its inherent and real value. Pro number 3, silver is cheaper than gold. Compared to gold bullion, silver is not only less expensive and therefore more accessible to buy, but it's also more versatile to spend. That means if you are looking to buy silver in the form of a coin to use as currency, it will be easier to break than a gold coin because it is lower in value. Just as a $100 bill can be a challenge to break at a store, divvying up an ounce of gold bullion can be a challenge. As a result, silver bullion is more practical and versatile, making this type of silver investment more appealing to investors. Pro number 4, history is on silver's side. Silver and gold have been used as legal tender for thousands of years, and that gives them a sense of stability. Many find comfort in knowing that silver has been recognized for its value throughout mankind's history. And so there's an expectation that it will continue to rise while a fiat currency might fall. When individuals invest in physical silver, whether that be through buying a silver bar, coin, bullion, or other items, there is a reassurance that its value has and will continue to rise. And now the cons of investing in silver. Con number 1, lack of liquidity. There is a chance that if you hold physical silver, it may not immediately go liquid. In order to make common purchases such as groceries, you are not able to use silver bars or bullions or even coins. So you will need to convert that into cash first. And the ability to sell silver in a hurry can be an issue at times. If you can't access a silver dealer and are in a tight jam, pawn shops and jewelers are an option, but they won't necessarily pay well. Con number 2, weak return on investment. Although physical silver bullion may be a good safe haven asset, it may not perform as well as other investments, such as real estate or even other metals. Mining stocks, especially silver stocks that pay dividends, may also be a better option than physical silver bullion for some investors. So Jacob Rant, what are you doing with silver? Are you going to buy more silver stocks, or are you waiting for a bear market in this sector? Well, my awesome people, to simply put it, I am going all in on silver. I have always wanted to add commodities to my portfolio, but before I did, I wanted to make sure that my portfolio was first structured to provide me with maximum dividends. And now that it has, I am ready to jump into precious metals. Finite assets will forever be worth something, and silver has had a long-standing history of being a valid investment. For each investor, the answer may be different. For those looking for greater returns with higher risk exposure, silver may not be the best option. For investors looking to gain access to the silver markets, owning both physical bullion as well as purchasing ETFs have their pros and cons. And investors may also consider buying equity in a silver mining company. But regardless of your decision, finite commodities are the only resource that will outlast companies and increase in value no matter what. And remember, my awesome people, just like all the information I mentioned in my videos, assess your risk appetite, always diversify, and please, please, please do your own due diligence because I am just a clown on YouTube. Stay ranting!